So we heard from your chief economist, Bruce Kasman, this morning talking about a return of normalcy to the global economy, no longer under the aftershocks of the global financial crisis. What does that mean for JPMorgan and your business going forward, a normalcy in the global economy?
First of all, thank you for having me.
Sure.
This is the first time since 2007 that we are seeing the 30 largest economies in the world growing all at the same time. And it was very clear in the IMF meetings a few weeks ago that that is what everybody's expecting and seeing with their businesses. So that means more client activity. Corporates are more optimistic about their businesses, right. And they are in the process of evaluating what kind of strategic transactions they would like to do, which is good for the M&A business. From the capital markets conditions on the credit side, they're very strong, and we see clients doing refinancings or issuing debt to prepare for activities they might see going forward. And of course, the payments business, which is all the digitalization, that continues to grow very rapidly. So that's good for financial institutions like JPMorgan and many of our competitors. We expect that to continue.
How do you see the specter of rising interest rates affecting profitability, not only this year, but going forward? I know net interest margins were up. Is it a better scenario for you?
Yeah, well, listen, if interest rates are going up because the economy is picking up, I think it's good. Yeah. And I think that's what everybody should be assuming in their scenarios. That it's not unreasonable to assume that some interest rates will be going up in the near future. And the question is how rapidly. Yeah. But if the economy continues to do strong, I would say that that is positive for the global economies and the global markets altogether.
Seems to be a lot of differing opinions as well on how much this political uncertainty, particularly in the United States, is affecting deal making. What are you seeing?
Well, listen, I think it's fair to say that a lot of companies right now are sort of like tuning off some of the, if you want, dysfunctionality in Washington. It's not that it's not, matters, but the business is picking up, as we talked about it, and people are focusing more on that and saying, what do I need to do to position my business, my company for the future? How do I go get some top-line growth, and how do I get better position in a competitive environment that is changing because either technology disrupting so many businesses, and I think people are focusing on the fundamentals at the end of the day.
Yeah, I mean, is there a weight on deal making or deal flows because of a lack of clarity, at least in the United States, on the tax reform or the tax change packages?
I think the answer is yes to some degree and in some sectors. If you're some of the companies that have a lot of cash outside the U.S. and would like to bring that back, they would like some clarity or have a better sense of how it's going to be finalized, the tax agreement. Is it a one-time repatriation? What's going to be the ultimate corporate tax rate? Because for some of them, it might be better to keep the money outside than, bring it back depending on what the tax rates will be. So to a degree, yes. But at the end of the day, I think more and more companies are focusing on the fundamentals, on what they need to do to reposition their business for a new environment, which, by the way, is changing because consumers are changing, because technology is disrupting many industries, regardless of what industry you're in.